Hey guys, what's going on? I hope you guys are well today. Hey, if you're new to the channel, my name is Brian Taylor. I'm the owner of Dreamline Realty right here in Charlotte, North Carolina. Guys, we got a bunch of things to talk about today. We've got a new report from the National Association of Realtors talking about the affordability index. We have the latest Case-Shiller report where we're going to talk about home prices. And as I'm recording this video, we are moments away from the Fed making their announcement for what they're going to do with rates for the month of November, and get a really good insight, hopefully, from Jerome Powell of where we're going to be going down the road, if there's future rate hikes coming, kind of what his thoughts are as he sees the economy at a whole. And we're also going to dive into a few quick stats here of what's happening locally right here in the Charlotte market. So let's gear our attention over here to the internet and take a look at this article talking about home affordability. So the National Association of Realtors says housing affordability hits historic low in August of 2023. It says compared to 1 year ago, the affordability in August as the monthly mortgage payment climbed to 26.2%, and median family incomes only rose by 4.7%. It says the effective 30-year fixed mortgage rate was 7.15% this August, compared to 5.29% 1 year ago. Now we're going to dive into some rate information here in a second. That 7.15 number that we just saw, that's old news. I wish we were back to 7.15, but that is old news because that was back in August. So let's continue on to see what this article says, and we'll jump into rates here in just a second. It goes on to say here, though, that the effective rate, which I mentioned, is 7.15 compared to 5.29 last August. So here's the housing affordability index. Now, what I want you to know about this index is anything at 100 means that basically 25% of a borrower's income is going towards housing. So if we go back to last August right here, we're at a number of 110.5, okay? Now what this is showing is you can see the ebb and flow of this as we've gone through the year. But right now we're at 91.7%. Now what this article goes on to tell us is that number at 91.7 is of course below 100, but that means right now 30% of buyers' income right now is going towards housing, and it's making it, as you guys know, if you've been following my channel, extremely unaffordable. So check this stat out here. This is very interesting. So the red line is qualifying income, right? How much of your income do you need to qualify for a house? And then the blue line is median family income. So going back to last August, family median income was just under $95,000, and you can see right here it really hasn't changed much at all. It looks like it's gone up maybe $4,000 a year, but look what's happened to the red line from back in last August. It was at $85,000. Now it sits at about $107,000. So what this is showing us in that same time period from last year, borrowers need to be making about $107,000 to qualify for a house versus the $85,000 that they needed just a year ago. So a couple more points I want to talk about on this document. We're not going to talk about mortgage rates here. We're going to circle back on that and check out Mortgage News Daily here in just a moment. But a couple things I want to share with you. It says, compared to 1 year ago, the monthly mortgage payment rose to $2,234 from $1,770. That's an increase, guys, of 26.2%, with monthly mortgage payments increasing by $464. All right, so let's go shift gears now. We're talking about interest rates, right? Right now, another article came out here from CNBC a few days ago, and it says adjustable rate mortgage demand jumps nearly 10% as buyers struggle to afford the housing market. It says the ARM share of mortgage applications is now at the highest level in nearly a year. So people always have had adjustable rate mortgages. Depending on your situation and how long you plan on staying in that house, everyone has always done adjustable rate mortgages. Of course, it's a very small percentage, but with interest rates being high, people are willing to take that risk of getting into a 5-year adjustable or a 7-year adjustable. And for you all that don't know how the ARMs work, a 5-year ARM basically means that your interest rate stays fixed for the first 5 years, or if a 7-year ARM, it's going to stay fixed for for the first 7 years. And then the hope in a lot of people's situations is they, number one, won't be in the house that long, which is why they would take an ARM, or they have hopes that rates will fall down in order to refinance that mortgage later on. But a couple more points here from this article. It says adjustable rate mortgages, which were considered riskier because the rates are fixed for shorter terms, they do offer savings. Now, the average contract interest rate for a 5-year adjustable rate mortgage decreased to 6.77% last week. Now, that rate's probably a little bit lower today because of what's kind of happened today so far with interest rates. But you can see the difference there, right? Rates have been over 8% or close to 8%. And if someone doesn't plan on staying in that house for 5 years, they could get into something at a mid to high 6% range. So let's go back and take a look at what's going on now with mortgage rates and see what's happening today. So there's been a lot of news that has already come out this morning, again, waiting for the Fed announcement and for Jerome Powell to speak. But we got some news this morning on a couple economic pieces of data that have driven interest rates down. So let's take a look at what's going on over here with mortgage rates. So as of this morning, now this is November 1st, like I mentioned, we are at 7.75% on that 30-year fix. Now let me click off a couple of these marks here because we're going to show you guys. This is Mortgage News Daily. Okay, so you can see, as you've all been following my channel, the skyrocketing of rates. I don't think this is any news to anybody, but if you hadn't been paying attention, we got up to 8.03% interest rate that was on October 19th. Okay, so you can see we have started to come down from there. Now, hopefully this is a good sign that this is going to continue. As of today, we're at 7.75%. So we had some economic news about jobs that came out this morning. There was less jobs created than expected, which is good news for the Fed to want to see the labor markets shrinking and softening. And then we had the JOLTS report that came out at 10 o'clock. That actually number was a little bit higher than expected, but not enough to freak anybody out. But the Fed, like I said, going to meet any moment. Every expectation out there is that they're not going to do anything with rates. But until I actually hear that, we'll just kind of see what happens. But what's even more important than that is what Jerome Powell talks about when he meets with the press after the announcement. And it's going to come down to what his tone is. If he's talking about additional rate hikes potentially down the road, that could spook the markets, drive rates up a little bit. If he says, hey, we're done and we're going to just watch things and not do anything, and he does say that we're done, we're going to see rates come down a little farther. So a lot of that all kind of depends on what is going on. But let's talk about home prices, because we have high rates, we have high home prices. Those two things together, guys, is causing the affordability issue. I don't need to tell you that. I know you know what I'm talking about. But let's take a look at what's going on here with home prices with the Case-Shiller Index. So we got numbers out a couple of days ago, and according to Yahoo Finance, home prices hit another record high in August. So let's see what was going on here with the Case-Shiller Index. It says home prices finished the summer at another record high as home affordability tanks to a historic low. The S&P CoreLogic Case-Shiller National Home Price Index, that is a mouthful to say, increased 0.9% in August, month over month, and 2.6% annually on a seasonally adjusted basis. This index has risen for 7 consecutive months and hit an all-time index in August. So if you've been tracking the market, you're hearing home prices with this decreased inventory are remaining high. And I think that we're going to continue to see that as we progress through the months ahead, especially with rates being high, a lot less buyer demand. The houses that are on the market for the most part are selling relatively quickly, but I will interject right here and tell you, in the Charlotte real estate market over the last 4 to maybe 6 weeks, we are definitely seeing the impact of these higher rates filtering in here to Charlotte. Some of it is seasonality, but not a whole lot of it is seasonality. We are seeing houses stay on the market a little bit longer, and we might see a little bit of a decrease in price in Charlotte. And I'm going to kind of show you what's been going on with the numbers that came out here for September here in just a second. So, but overall, across the country, I guess in a nutshell, we are overall seeing prices remaining very, very steady and going up a little bit overall. So let's dive into some stats here, and I'll show you exactly what I'm talking about, what's going on here in Charlotte. And then we're going to see what the Fed did when they met, which will be over by the time I'm finishing these pieces for you guys. So let's jump into some local stats here in Charlotte. All right, so before we get into exactly what's going on here with prices, let's talk about new listings. So these are numbers that came out for September because we're always 1 month in arrears. But for new listings, we sit at 4,294 new listings. That is down 8.6% from last year. So if we go over to the right-hand side here and take a look at August. In August, there was 4,577 new listings. September sits at 4,294. So now what I want to do is go over and talk to you about what's happened here with closed sales. All right, so closed sales in Charlotte, guys, take a look at this. We're with 3,316 closed sales in the month of September, but that is down 24.9% from this time last year. So that's what I'm saying. These interest rates are really starting to show this, and I think we're going to be in an environment where we're gonna see less and less of closed sales until we can get some more spark in the market with interest rates coming down. So again, if we go look at August, we were at 4,003 closed sales, and in September that was only at 3,316. All right, now let's get into some home price data. First, I want to talk to you about the average list price. So average list price in September was $504,290. That was an increase of 8.9% from the same time last period. Again, going over to August, last month, or August, we said at $482,109, and that's a pretty significant jump up to $504,290. So that goes along with what I was telling you, that home prices are relatively staying stable and increasing a little bit. But let me shift gears over here and talk to you about the median sales price real quick. That'll give us a little bit better indication. The average list price, I don't really like to pay attention to. To me, it doesn't really give a total projection of things, but it is a number that we do pay attention to. But let's talk about what's going on here with the median sales price here in Charlotte. So the median sales price for the month of September was at $380,000. That was actually a decrease of 0.02% from this time last year. So not a major decrease whatsoever. Going back to August, we were at $385. Now we are at $380. So a little bit of a decrease in the median sales price. But let's remember, if we go back to March of last year, we were at $368,500. Starting into the height of the spring market, the highest that we did get was $390 back in July. So overall, we're about $10,000 lower than we were. But again, we're talking about the median sales price. We are still seeing multiple offers in a lot of situations. Again, for those properties that are priced well in great neighborhoods, we're still gonna see that. But like I mentioned, overall, there is this little bit of softening that we're seeing right now in Charlotte. So hey, the Fed is done talking. We've got some news out. Let's go see exactly what's happening with the Fed and what their plans are going forward. All right, guys, the Fed has spoken, and it says here that the Fed holds rate steady, so no increases. This is the same thing that happened last month. They are holding rate steady with upgrades assessment of economic growth. So what they're saying is the Federal Reserve on Wednesday again held benchmark rate interest rates steady amid a backdrop of growing economic and labor market and inflation that is still well above the central bank's target. Goes on to say here that core inflation is currently running at 3.7% on an annual basis. And while that has decreased steadily this year, it is well above the Fed's 2% annual target. So as I've been watching this news conference, basically the Fed is saying, hey, we are going to hold, but we are not putting our foot off the gas. If we see things get out of control, we're prepared to make another rate hike if needed. So that's pretty much the tone that they've had over the last 60 days. Personally, I think with what I've been tracking, that we are starting to see the labor market softening, which is what the Fed wants to see slowly but surely. I think inflation numbers are going to continue to come down. I don't think the Fed is going to hike anymore, but I don't think we're going to see a rate cut until probably third quarter of 2024. But let me know what you guys think. Do you think that rates are going to start coming down? I personally think that we're going to start seeing rates come down from here. I don't see us getting back to 8% and staying over 8%, although we are technically right at that 8% mark. But I can't predict anything. I just tell you guys what I feel, but I do think that rates are slowly going to come down. Nothing crazy. I don't think we're going to see a 6% interest rate until close to the end of next year at best. I think we're in this higher for longer stance for a while, but I would love to know what you guys think. Do you agree with me, or do you think something different? So drop below what you guys think in the comments. But guys, if you need my help in your home search, I'm so easy to get a hold of. Give me a call, shoot me a text, or my favorite by far is to hop on a Zoom call with me. Let's talk about your situation. I can share my screen, show you houses, show you maps. It's just much easier to do it that way. Get a good idea of what you're looking to do so I can help you down the road, whether that's now or in 2 years. It doesn't matter to me. But scan that QR code, get on my calendar, guys. So guys, that's all I got for today. Thank you so much for hanging out with me. And if you guys have any questions, let me know. And as always, make it a great day.